Okay, hello guys, your boy Toxic, it's your boy Toxic. So today we'll be doing our market focusing on GXY, GU, and some other currency pairs. So let's go down into business. So starting the beginning of a new week as a trader, the first thing you need to do is you need to start by coming to your GXY, and your higher time frame is one of the best time frame to start doing your top down analysis. So your higher time frame gives you more confluences and actually gives you a good direction or prediction of where you are supposed to be looking at your market and how you're supposed to be looking at the market. So this is our GXY. We start by understanding GXY has been an uptrend. As you can see, we had the break of structure all the way at this level. So GXY, we have always been looking at buys opportunity in GXY. You can see we have a break of structure here. That was our break of structure. So we have always been in an uptrend, and now what are we supposed to be expecting? We are expecting DXY to rally more to the upside. So here I'm gonna use this place like an order block. Reason being, when you go to your smaller time frame, you will understand why that is reacting like an order block in our trade. So here we're gonna put here as an order block, which is a key level, because you know in the forex market you only work with key levels. So now I want to talk on this part of the market, guys. So we are talking based on this part because remember, each candlestick that form here takes 1 month to be complete. So immediately the market taps at this key level, what do you observe? You can see a very big bullish engulfing. So this candlestick actually here, it's an engulfing candlestick that is telling us that buyers have come into the market. That was the whole of last month. The whole of last month we were bullish on DXY, telling us we had buyers in the market more than sellers. So, and you need to also understand that the market is actually reacting in a key level. So we go more to our weekly time frame. So this is our weekly time frame, guys. So in this 1 week time frame, what will you understand? You understand that immediately the market tapped in this order block, we had a change. We had like a push to the upside. So now I want to explain something at this level. Let me just start by taking out all of these things. So okay, so technically for me, I am expecting the market all the way up here because this is our next draw on liquidity. So we are expecting more buys. We are expecting more buy momentum in our DXY. But let's look at this candle range over here, like see the CRT move. If you know what CRT is all about, CRT, candle range theory, and the rest. So we have this candle here that took out this low and the high. So when you mark at that candlestick, you first start by understanding we have a break of structure here. So you always mark at all the confluences of the market. So the market gave us a break of structure all the way to this low. So I will put our break of structure. Yeah, I will put our break of structure, our BOS. We had our BOS at that level, which is our break of structure. And of course, at this level now, the market closed like price closed within this range. So now what are you understanding? For my best of knowledge, price has collected liquidity in the upside and price has collected liquidity in the downside. So now where is price heading to next? That's what you're supposed to be looking at as a trader. So for me, technically, I'm looking at price to go more to the upside. So we will start by going to our daily time frame. So guys, if you haven't subscribed to my channel, this is your boy Toxic FX. Yeah, I drop our market focusing every week on what we are expected of the market. So let's continue. Let's get down to business. So do well to subscribe, like, share. Let's continue. So okay, now you will understand this is our daily time frame. So in this daily time frame, you start by understanding the market have taken out this high, giving us now a change in the state of delivery. That means the market has changed from selling from the sell side to the buy side. So now we are no more talking of sell side liquidity, but now we are talking of the buy side liquidity. So the market now is going to collect sell side liquidity to the upside, because you know when the market is selling, buy side liquidity is sleeping at the upside. When the market is selling, sell side liquidity is sleeping at the buy side liquidity sleeping on the downside, sorry. So when we are selling to the downside, we are coming down to collect the sell side liquidity, and when we are buying to the upside, we are going to collect the buy side liquidity. So you can see that change in the state of delivery at that level. They're very clean. We had a very clean change in the state of delivery there. We had our order block here, and I always say, looking at an order block, a valid order block is an order block that comes with a fair value gap. So once you mark out your order block, this is your fair value gap here. That's just very simple, guys. Very, very simple. So at this level here, you have your FVG, which is your fair value gap, and at the level below, we have our order block. So this is in our daily time frame. So what am I expecting of DXY? What am I expecting of DXY is I'm expecting the market to rally more to the downside before we can actually start looking at our potential buys. So I'm expecting DXY to come all the way to the downside, take out this level, give us our change in the state of delivery like this, and we take our buys up the way to the next draw on liquidity. So that's just what I'm looking in DXY. This is how I'm looking in my DXY. But then maybe probably we'll look at this move maybe Mondays or Tuesdays. So we are expecting Monday or Tuesday for a sell. So I will just go straight to the 4 hours time frame. I'll go to the 4 hours time frame. So we look at more confluences in the 4 hours time frame. And when you look at this 4 hour time frame now, what will you observe? You observe here with me, like you agree with me, that at this level of this 4 hours time frame, let me remove these things, you actually kind of see our order block very clean and clear now, because this is the 4 hours time frame. The order block is very clean, and the fair value gap is very, very clean as well. The order block is very clean, the fair value gap is very clean. So don't mind about the drawings, but just follow up what I'm trying to say. So you see this is the order block very clean, and you see the fair value gap also clean as well. And if you notice, you see the market reacting in the fair value gap, as you can see. So I'm just looking at, in my point of view, I'm looking at the market to take out this high firstly. So when the market opens, what are we expecting on the DXY when the market opens in our 4-hour time frame? So in the 4-hour time frame, I will be expecting the market to take out these highs and rally now to the order block before we start looking at our change in the state of delivery to have more buys to the upside. And this is how I'm expecting the market to give us Monday or Tuesday probably. So what is your rule as a trader? Your rule as a trader is for you to just be patiently waiting, and you need to expect the market to come back all the way down, and you see that change in the state of delivery that you are expecting, and then you can take your buy all the way to the upside. So that's just what I'm expecting from the market, guys. So without wasting much of your time, let's go to our next currency, which is our GU. So we go to our GU. So if you look technically, I had already done my analysis, so I'll just do more of the explanation to you guys, because I'll just explain more and more confluences so you understand. So this is our GU. Let me delete these things so we can do the analysis together. So it will be kind of, interesting. So this is our GU. In GU, if you notice, we had a change in the state of delivery pushing to the downside. Like GU has been in an uptrend, quite alright. But now we came here, we had this change in the state of delivery pushing to the downside. So now, where are you looking at GU? Where is GU buying to? GU is buying to collect liquidity at this level. So I'm expecting GU to collect liquidity at this level, because this is in our weekly time frame. So in this weekly time frame, a lot of people will agree with me that we are supposed to be expecting GU to buy before it sell, same as DXY. In our DXY pair, we always say this: if you see GXY selling, if GXY is pulling to the downside, definitely GU will be buying. So okay, looking at GU now, this is what I'm looking at GU. After having this change in the state of delivery at that level there, the market breaking that low, I'm looking at GU to buy all the way now to this order block here. We have this order block here in the daily time frame, and we have this fair value gap. And I will still repeat what I always say, guys. A valid order block comes with a valid fair value gap. So don't forget that. We have so many types of order blocks. We have the valid and the invalid order blocks. But if you want to know a valid order block, no, you have to spot out a valid OB with a valid fair value gap, which is our FVG. So that's what we are looking at. So we go now to our 4 hours time frame to see what the market will do on the 4 hours. So looking at this market in our 4 hours time frame, okay, now you agree with me and some confluences with me, because in higher time frame, the higher time frame shows you the order block and the fair value gap. But when coming to the smaller time frame, now you have to start looking at how the candlesticks are printing. So we had our order block in our daily time frame all the way up here, but when you look at that area of price, you discover that that price has already been collected. So there's no liquidity there, there's nothing there. The price, our order block now is sleeping all the way here. So agree with me, this is now our order block. That's our order block, and now this is our fair value gap all the way here. That price never collected. So that's why we call it a top-down analysis, because when you analyze from the higher time frame and break into the lower time frame, it's giving you more refinement to your trades. You're being more refined on how to take your trades. So what am I expecting our DXY to do on Monday? Is I am expecting to collect this liquidity, give us a change in the state of delivery, and pull to the downside. And this now will be our next draw on liquidity. So that's how I always approach my market for my forecasting. So let's take our next currency. Our next currency will be our EU, and I'll be very fast on it because I had already done my analysis. So now I'm just trying to do this video to help those beginner traders or some of the advanced traders that are still having some issues in taking their trades when it comes to the forex market. So now remember, always start analyzing your market from the higher time frame, and also remember, always I insist on this one, never you take a trade without actually putting all your confluences in order. Because a lot of people lose money in forex not because they don't know how to trade, but because they don't put their confluences together. You need to have a system on how you approach the market. The forex market have a lot of system, being a demand and supply trader, trend line trader, support and resistance. Always make sure your confluences are aligned and be patient and wait for price. So let's continue, guys. Let's continue. So this is our EU, Euro USD. So in our Euro USD, a lot of people will bear with me. Like some people will be looking at buys opportunities in this trade, but I in person, I'm not going to look at any buy opportunity, because I always tell people look at momentum. There's something we call momentum in the market. If you always look at the momentum of a trade, you will understand that the market, when you start seeing momentum in the market reducing, you need to start understanding that you have a change. The market is about giving you a change. So here at this area here, we had a very slow momentum. The momentum there was very little, and even though it managed to give us a break of structure to the upside, but I'm looking at sales opportunity from this price action I'm seeing. So I'll just go straightly to the daily time frame. So we look at our confluences. So in our daily time frame, you have our change. We had this break of structure here. Which is our change in the state of delivery. We are looking now at sales opportunity, normal buys opportunity, and I'll also mark at this level here, guys. I'll also put that out. This is our order block. So this is our order block. I will not be naming them anymore. So you need to just understand that's our order block, and this now will be our fair value gap. And you see this fair value gap was actually large. Like really, this is a big fair value gap that the market need to go through, tapping the order block before giving us now our sell move to the downside. And of course, when I was talking of momentum, I would like you guys to understand this the concept behind momentum. Momentum is actually what drives the market. So looking at this price action, imagine each candlestick here takes 1 day of price action. So you can bear with me how many weeks the market have taken to form this number of candlesticks. You have to bear with me the truth. And when you come look at now the bearish candles, which is this one, this is just 3 days price action that collected all of this liquidity at this area. So you understand that momentum is something. If you understand momentum in the market, you understand how the market moves. Once you start seeing short or lack of momentum in a currency, you need to start identifying that this currency maybe it's coming to an end or we are about to have a change. So down without much wasting of your time, we're gonna go to the 4 hours time frame. And in the 4 hours time frame, you understand the concept of liquidity, so you don't be the liquidity. So firstly guys, this was our fair value gap and that was our order block in the higher time frame. So a lot of people are gonna fall for this inducement right here. So I'm gonna delete this. A lot of people are gonna fall for this inducement right here because when you look at that candlestick, the candlestick is actually showing us some major rejection, which is kind of a rejection candlestick, this one. So I'm gonna show you this candlestick here. So a lot of people enter this trade for their sell at that level, and definitely we all know there will be a lot of stop losses, there will be a lot of pending orders that will be sleeping at that level. So for me, technically, I'll be expecting my market to rally to the upside, guys. I'm expecting this market to rally, collect liquidity, give us a change in the state of delivery. We have something like a slight change in the state of delivery, and I'll be expecting the market to do something like this. So that targeting the next draw on liquidity all the way down. So this what I'll be expecting in Euro USD. So don't be a liquidity in the market. Wait for price to reach at that point or at that area where you are interested in price to take your trade. Don't rush the trade. Just be patient. So from there, I would like to go. We'll take our USD card. So USD card is a swing trade, a very sweet swing trade at that matter. So this is our USD card, guys. So in this USD card, you need to start by understanding where price is coming from and where price is heading to. So price has been bullish. We have been in a uptrend, giving us back-to-back breakout structures, higher highs, higher lows, higher highs, higher lows. And you actually bear with me. We had an order block at this level here. So I had already done this trade. So I had already done my analysis. So now I'll just be showing you on every single step I take. So we had this order block and we had this fair value gap. So I always say, and I'll say it again, a valid order block must come with a fair value gap. If there's no fair value gap, that order block is not valid. So when you want to approach an order block, make sure it comes with a fair value gap. Make sure. So you have our order block there, we have our fair value gap, which is this level here. We have our fair value gap, which is this level here. As you can see, our order block, fair value gap. So the market has tapped in our order block, and you can start seeing a change. Like we already have a change in the state of delivery. So where is the next drawn liquidity? The next drawn liquidity is all the way up there. So this is a swing trade. If you can hold the trade for long, that's a very good swing trade for you. And of course, this is our daily time frame now. So what can you see in this daily time frame? You can see a break of structure to the upside. Like guys, this trade is literally very clean, literally very clean. This, like, I myself, I'm gonna take this swing trade, like, for seriously, I'm gonna take this swing trade because I make sure I hold this trade all the way to my take profit up there. because this trade I actually understand and all of my confluences are in order. So what am I expecting? I'm expecting now the market to come down. I'm expecting the market to come down, take out my order block, give me a change in the state of delivery, and I take my buys, targeting the next, take my market targeting the next drawn liquidity. You all know the next drawn liquidity is all the way up there. So if you don't, maybe you don't want to hold your trade for some couple of months, couple of days, you can still, collect your trades accordingly, like take partials and all the rest. So this is our USD card, and you can see, guys, this trade is literally clean. This is an A plus setup. A plus setup. This one is 100 A plus setup. So we're gonna go down to like our CHF JPY. This is also an amazing trade. I don't trade all of these pairs, but I always like analyzing them because you always see an A plus setup when it comes to most of these currency pairs. So I always analyze them to make sure I can execute some of them. One, I see my A plus setups because these pairs are good pairs, and they are also, they make a lot of noise in the market too. So going down to heading down to our weekly time frame. So in this weekly time frame, firstly, you can see we had a break of structure, like price breaking that neckline, and immediately price break that neckline, price gave us an order block. What you need to know in this market is, if you can know how, as a trader, if you know how to identify an order block, a mitigation block, fair value gap, breaker block, guy, you're good to go. Forex is not difficult. The most difficult part of forex, a lot of people don't talk about, is your physiology, your emotions. Emotions is one of the highest things that destroys a lot of traders, but for now we are just doing our market focusing. So emotion, we'll talk about that later. So once again, it's your boy Toxic, guys. If you haven't subscribed to my channel, please like, share, subscribe, so anytime I drop amazing videos like this, you'll be notified. And also click on the notification bell, so you'll be notified anytime I drop videos like this for you guys. So let's head down to our daily time frame. So heading down to our daily time frame, guys, you can see the trade is actually, or it's literally giving us some cool moves already. But this trade, I need to see a break of this high. So I'm gonna go to the 4 hours time frame, because there I'm not seeing much confluences to explain myself to you guys. But then this way it comes more interesting. You see, this is our 4 hours time frame. We have our valid order block down here, our order block down here, and we also got our fair value gap. We got our fair value gap here. And also there's something I would like to address. Price must not definitely reach your order block. That's one thing I need to talk about. There are times price is gonna respect your fair value gap and not your order block. So you need to understand, well, guys, that's a fair value gap I wanted to put. So let's just continue. So price might respect your fair value gap and not your order block. So when trading, you just need to keep your eyes on price, because it's not all the time price will respect the order block, but majority of your time price might respect your fair value gap. So for me, technically for me, I'm not gonna take this trade till I see a break of this high, because for now I'm not seeing any confluence that would permit me to take this trade. So if I see a break of that high with a closure, then I will take this trade. So for example, if I see this trade breaks this high with the closure, giving me a pullback, then I'm gonna take my buys. But if I don't see a break with the closure, I'm not trading the pair. So this pair is not an A plus setup. This is not an A plus setup. It will only become an A plus setup if we see a break with the closure above that high. So this is one of my favorite pairs also. Yeah, so I'll explain to you guys how I managed to take this buy. Like you can see, this a 5:54 risk to reward arrow. So this was actually a trade I've been observing for a very long time, and man, I'm not gonna lie to you guys, this currency dealt with me last week. Like it literally dealt with me. So this is our weekly time frame. Normally, I'm not a trend line trader, but I've been seeing these market models in some couple of trades I've been looking at. This is a market model I've been observing, the kind of a triangle pattern or rectangle pattern, something like that. So I've been observing this model for some long time. So I was expecting, normally I know in my mind there's liquidity down here, and I also know there's liquidity up here. So what am I expecting? I'm expecting price to collect liquidity. So I was anticipating that if price collect liquidity down there and break with a closure, I'll be looking for more sales. But if price breaks with a closure above at the high, I'll be expecting more buys to the upside. So when price break at that high, I never took the buy immediately because I had to be like I needed to see some confluences in the market. I needed to see some confluences. So when price break this high, I spotted out this order block. You see, that's the power of an order block, guys. If you know how to identify an order block in the market, you always have amazing trades, amazing risk to rewards like them, guys. So back to business. I spotted out that order block and I was patiently waiting for price to take out that order block. So immediately I saw price tapped in. That's when I started looking at my buys opportunities in this trade. And you see, I'm still holding this trade till now because it's a swing trade I've been holding. And you see, this was where I took my entry. So I've been holding this trade and I'm waiting for this trade to smash my TP, guys. So this one, A plus setup 100, and I'm still in the trade. I'm still holding it to TP. So now what am I trying to say? When you see an A plus setup in the higher time frame, you can hold the trade all through to your TP. But if you're not 100% sure of your setup, then you can now start collecting your partials. So let's run down to what currency again. What currency can we look at? Okay, the USD CHF. Okay, this is the USD CHF, also an amazing trade, also an amazing trade. Like I've already analyzed this market, but I'll just take you guys to the breakdown on how I did my analysis. So I'm gonna be fast on it, but you guys gonna understand. So when you look at this pair, it's almost similar to DXY because it's the US dollar, so it have similar movement like our DXY pair. So when I came here, I saw my break of structure, and guys, always look at price from the other side. Why did I mark this level like a key zone? Let's come a little bit behind. You see, when price came here, there was a key level. That was an order block that gave us this break of structure here. There was an order block that gave us this break of structure here. But price never came back to that order block. But price came back to the fair value gap. As you can see, we had this fair value gap here. There was a fair value gap that we were anticipating. Price came, tapping the fair value gap, but price never respected our order block. So now you can see all the way here, price came and boom, price tapped into our order block. So now that's our order block price have tapped in. And now what are you expecting? I am expecting more buys to the upside. Okay, sorry guys, my dogs are kind of making crazy noise. So I was expecting the buy. So coming now to my daily time frame, I spotted out a clean break of structure, guys, very clean. So let me remove that. We had this break of structure to the upside. What is this break of structure actually kind of telling us? This break of structure is telling us price is going to continue moving bullish. So what am I expecting? And I'm expecting my fair value gap, my order block. You see, I only take my trade from an order block or an fair value gaps. So immediately price came down, gave us this break of structure. Guy, Me, I'm just expecting this market back to this order block, the 1 day order block, giving me a change in the state of delivery like this, and I'm taking my buys to the next liquidity. So that's how I am looking at this trade. This is also kind of a swing trade, you know. This is a very good A plus setup. Immediately price take out that order block. I won't lie to you guys, it's a very good A plus setup. It's a good A plus setup and a very nice trade also. But I trade only EU, GU, and gold. I don't trade gold these days because gold have a lot of noise in the market. So I'm gonna technically go to gold. Let me go to gold. This is gold. I'm avoiding gold all of this while because if you look, gold has been consolidating. So I only take gold if gold break above that neckline. If gold can break above that neckline, I'm gonna wait for a pullback to look for more buys opportunities. But I'm looking at gold to continue buying, but I need to see a break of that neckline. So for gold, I don't trade gold recently. I just observe. So BTC, let's talk on BTC a bit. Okay, so this is BTC. I took a trade today on BTC. I took a buy trade on BTC today. So BTC has been in an uptrend after consolidating at this area here. After a lot of consolidation at this area here, BTC gave us a break, and after giving us that break, you always bear with me, guys. That's why I always say order blocks are the king to the market. There's one thing: anytime the market consolidate, the market will give you an impulse, and whenever the market gives you an impulse move, the market will give you an order block and a fair value gap. So that's just how the market operates. So you see, this was our fair value gap and our order block. So what did price do? We waited price patiently, price tapping our order block, and this is our next draw on liquidity. So that is how I manage to approach my trade every single week. As you can see, there was the buy I took today in gold. That was the buy up there. That was the buy. I took the buy today. Let me go to the 1 hour. So yeah, that was the buy I took today in gold, and you can see we hit TP very clean, like straight to TP, guys. And this is a 9:59 arrow. So when you want to approach your market, you need to start by doing your top-down analysis. Doing the top-down analysis, it gives you a lot of confluences and where the market is coming from and where is the market going to. So doing a top-down analysis in the forex market helps a lot of traders to be profitable. But if you don't understand how the market operates, you will always have issues with the market. If you don't understand how the market operates, you always have issues with the market. So guys, you just need to keep it simple, be simple with the market, don't complicate stuff, but try to understand key levels. Try to understand your key levels when it comes to the forex market. Where is the market coming from? Where is the market heading to? Where are my key level at? And always make sure you look at all your confluences. Are my confluences aligned? So happy Sunday, guys, to everybody. It's your boy Toxic. We'll be expecting the market to open anytime soon, so just keep it simple and stay consistent to your trade. Stay consistent, keep it simple, and let's see how the market goes. So for those of you that it's your first time coming to seeing my videos, please support me, like, share, subscribe, and turn on the notification button, so anytime I post amazing market forecasting like this, you will be notified and you will see how I look at my trades and how I take my trades and how do I approach the market. So it might help you on how to approach the market too. So cheers out, guys.